Okay, so now it should be working, and hopefully we have people still in the call. Again, very sorry for the technical problems. We will negotiate with Teams and Microsoft for next time. And I will try to keep it a bit short now, so I know you're all busy. And we left off a bit in the Awardit introduction. And as most of you know the company rather well, I will leave it at that and move into the results, basically. You also know about our historical results and what they have been. Will not dwell on those, but rather move on to the third quarter of this year. And I'm happy to present strong results for the third quarter of 2022. We generated 196 million Swedish crowns in revenues in the quarter. Of this, Prämie Direkt contributed 41.3 million SEK, and it's the only business that we now consider non-organic to us, as it was acquired in December last year. The 196 million SEK means we had a 55% growth compared to last year, of which 23% organic growth. And this was driven by strong performance in Awardit programs in loyalty, both in B2B and B2C. In particular, in B2C, we had a strong start to the quarter and then back to normalized levels in the end of the quarter. Can also see a strong underlying organic growth in the beginning of fourth quarter at around 20%. And there we have adjusted for a non-recurring revenue that we had last year in October at around 5.5 million SEK. But the underlying organic growth continues to be in line with what we've seen in the third quarter, also for the fourth. Also worth mentioning is that Prämie Direkt is back to year-on-year growth for the quarter of 7.5% compared to last year. In this growth, we also have a currency effect, which is about half of the growth. But we see the business is stabilizing and back to a sort of normalized level of sales and profitability, even though the market conditions in Germany continue to be challenging. We also have attracted quite a few new customers, both on our loyalty programs and on our gift card solutions. On the loyalty side, we have signed with Malmö Redhawks and Byggma during the third quarter, and they will start using our index products, which is our entry-level products into our other programs. On the gift card side, we have signed with Elon in Norway, not Elon Musk, but Elon, the electrical retailer, and with Granit. We have also strengthened our retail distribution of Supergift, where we are now distributing through sub-brands of Coop and Norgesgruppen, and also through Reitan for the high season sales. On the EBITDA side, we had a strong quarter where we had 33% growth compared to last year and delivered 20.1 million SEK compared to 15.1 million SEK last year. And it's worth mentioning that all the businesses that we acquired last year, which is Prämie Direkt, MBXP, and TIC, individually delivered a positive EBITDA contribution in the third quarter. And in total, this was 3.9 million SEK out of the 20.1 for the quarter. And we have a positive impact from Supergift breakage in the quarter of 1.5 million SEK. And this breakage you can see will improve and be strengthened in the fourth quarter as we sold more volumes of Supergift in the fourth quarter of last year that will potentially not be redeemed this quarter this year. And to look into the margins a bit more in detail, the gross margin of the quarter was 28.1% compared to last year's 31.1%. So we have a lower gross margin, and there are no one-off effects in this, as was the case in the first quarter. Here, rather, the margin is diluted by a higher proportion of sales in our group coming from lower margin programs and lower margin parts of the business. And as we have expanded our business, we have taken on programs and business areas that have lower margins than what we have had historically. So therefore, these will be dilutive to the overall margins. There's also a natural fluctuation between quarters due to the business portfolio that we have built. So this we will see throughout the quarters moving forward. But we believe we will stabilize and come out with a stronger EBITDA in the fourth quarter. There is also a small effect on the gross margin from product mix, where we had a higher proportion of sales from digital products in the third quarter than we had historically. So looking at the EBITDA margin, we had a 10.3% margin in the third quarter this year. And that compares to 12% in last year's third quarter. And again, the EBITDA margin has been negatively affected by the dilution of gross margin, of course. On the other hand, we have seen a positive effect from operational efficiencies in our businesses and from the Supergift breakage. So looking at the P&L, you can see that we actually come out with a stronger EBIT margin, where we generate an operating result for the quarter of 10.6 million SEK compared to 6.5 million last year. So the EBIT margin that we do come out with is 5.4% compared to 5.2% last year. And this is coming, of course, from our 55% growth in the quarter. We report our Supergift breakage as other operating income in the P&L. We see that the commodities are increasing as a share of sales, mainly driven by a higher turnover in the business, but also reflecting the slight dilution of gross margin that we see across the business portfolio. And most other external expenses that we see rising here are related to Prämie Direkt, which constitute 4.1 million SEK of the increase in external expenses, and only 0.7 million SEK is coming from the rest of the operations. So we are scaling the business in a successful way. Can also mention that on our personnel costs, we are increasing from the Prämie Direkt acquisition, but there's actually a decrease in comparable numbers from last year of minus 1.3 million SEK in personnel costs for the rest of the business, which means that we are operating with stronger synergies and in a more efficient way compared to last year. Hence, coming out with an operating result that is stronger at 5.4%. And moving on, we have also a positive cash flow development in the business. For the third quarter, the cash movement is positive with 15.4 million SEK. What I show here is an overview comparison between this year's third quarter on the left and last year's third quarter on the right. And I can mention that the inventory has only been increased slightly in time for high season sales. So we have increased by 2.1 million SEK. That is primarily from Prämie Direkt. In the rest of the business, we have not really increased inventory and still believe we will be able to fulfill the demand of the high season. Also, we have decreased our accounts receivable by almost 33 million since the entry into Q3, which means we have tied up less capital. And accounts payable has decreased with 4.5 million SEK. So we have a positive cash movement of 15.4 million SEK, even though we have also amortized around 15.2 million SEK, which is part here of the negative cash flow from financing activities in the quarter. And if you compare to last year, obviously we had lower amortization last year, but we also issued shares and took on new loans to fund acquisitions last year. So that's why there is a difference in cash flow from investing activities and also from financing activities in last year. And also looking at the cash conversion rate, we have a cash conversion to date, which is 31%, sorry. For the full year, last year, it was 46%, and rolling 12 months, it's 64%. And this illustrates that we are skewed towards a stronger back end of the year in terms of cash conversion. And that obviously we will see also this year. So we believe we will continue to have a positive cash flow development throughout the year and ending the year on a strong note for sure. So summarizing where we are continuing to see underlying strong growth in October. We believe that we will be able to grow our 60% that we target for the full year in 2022, still delivering strong margins, and also to deliver the best EBITDA result ever for the year, and to beat the EBITDA result of the fourth quarter last year. We are still integrating part of the TIC customer portfolio to Awardit's tech platform. We will be technically ready by end of the year, but will choose to migrate some of the programs in the beginning of next year, not to disrupt high season sales. The operational and organizational synergies that we have had from TIC are realized and can be seen in the efficiencies in our P&L. And we have identified and initiated several projects across the group to identify cost savings, to find cross-selling opportunities, and to work on other business-oriented synergies. One of those is that we are launching a super gift entertainment card in our retail channels in time for high season sales, and have prioritized that. We are also working on development of our business in Germany to be able to meet future demands of our customers there. And we have implemented a new group accounting system that is now live for this quarterly report. We have strengthened our organization by recruiting a group CIO and an interim group head of HR, supporting the structures and the governance of the organization as a group. We also see, as I mentioned, a steady flow of new customers coming in, both within gift cards and within the loyalty segments. And we also see that we have a strong pipeline of new prospective customers in both these. And we believe we will be able to have strong organic growth from those in the future. We have identified and started the conversations with potential value-creating acquisitions. At the end of the quarter, as I mentioned, we have a cash position of around 250 million SEK, which means we are in a good position to act on future potential opportunities. And we still have the vision to become one of the absolute leaders on the European market, and believe we are on a strong way to achieve that. And by that, I will go to Q&A if you have questions on this quarter and its results. And I forgot to mention, in the Q&A, please put your questions in the chat, as sound seems to be difficult today. We will try to work in the chat with questions, and I will try to pick them all up, of course. So please, if you have questions, put them into the chat, and I will try to answer them one by one. Okay, I have no questions so far that I can see. So I have a question, which is, which products will we be growing with in Germany? And the answer is that in Germany, we are, I mean, as in the Nordics, we are working full scale within loyalty programs and gift card solutions. And in Germany, as of today, through Premier Direct, we're working with loyalty solutions and loyalty programs, and not always full scale with our customers in terms of offering both the earn side of loyalty programs and the different modules connected to that, and the burn side and the fulfillment. So we see a possibility to develop the business in Germany together with Premier Direct to become more of a full-scale loyalty program provider. So that is a project and work that has been initiated, that where we work together, the teams in Premier Direct and the teams at Awardit Nordics. We also have an opportunity to start selling gift cards in Germany, and we're not really, I mean, doing that. We are planning to launch Supergift in Germany, either end of this year or beginning of next year. So there's a huge scope, of course, for adding gift cards both to our product portfolio in existing programs, but also to our overall sales strategy in Germany. And there's also, of course, a potential to look at future potential investments into Germany that can complement the Premier Direct business. Yes, and from Simon here, number of questions. I will try to take them one on one. First, organic growth was much better than we expected. How much of the organic growth was driven by B2C and EuroBonus specifically? So, I mean, B2C was a driver, but it was not everything, but a very strong growth in the B2B loyalty programs as well. The effect on B2C coming from EuroBonus was mainly coming in the beginning of the third quarter, as the levels then were normalized into, you know, normal good growth, but nothing spectacular, to be honest. So end of last quarter and first month of this quarter, we had a good effect from EuroBonus specifically, which was also slightly dilutive to margins, I would say, because B2C is a bit lower margins than B2B in general. And next question, could you elaborate on the new business you have signed with lower gross margin? What kind of customers is that? Well, I mean, different parts of our business portfolio do have lower margins. So as an example, Premier Direct have lower margins than the rest of the business. Also, MBXP typically in a normalized quarter would have lower margins than what we have had historically. So that's one way of seeing it. And the other way is that we have also some clients that we have signed on with a bit of lower margins, able to attract them from strong competitors in the past. So there might be a couple of clients with lower sort of margins in their contracts that have joined the business as well. But of course, we don't do bad deals. We take on businesses and new programs to become a stronger business, of course. And your trading update on October, what is the organic growth driven by? It's driven by the same factors basically as in Q3, strong performance in both B2B and B2C loyalty programs, in the gift cards business, and in the other business units. So nothing that stands out. It's basically continuing from where we left off in Q3. Turning to the other part of your guidance, higher EBITDA year-on-year in Q4. Last year, you had a boost in MBXP from COVID support, and you also had unusually high profitability in Premium, as it was not consolidated for the whole quarter. Could you walk us through how you expect to beat that? Because that would be impressive. Well, I mean, I don't have a total breakdown of that I can share, to be honest. We believe we will have strong continued organic growth, for sure. We do have, I mean, a full quarter effect from Premium. We have some positives in terms of potentially higher breakage from Supergift coming in the fourth quarter this year compared to last year. So the way we see it should be possible. It's, I mean, it will not be easy, of course, but we believe it's achievable for sure. Yes, thank you, Simon. Of course, happy to catch up on any other questions later on. And then I had one more question from a guest here. M&A flow, do you have any discussions at the moment? Yes, we are in discussions. We don't have anything to communicate as of today, but we are in interesting discussions and hope to be able to come back with more information at a later stage. Yes. Any other questions? We'll just give it a couple more minutes. More than 6 months on the job. Any comments? I mean, it's been a great 6 months. Interesting, of course. I think when I joined because I saw a huge potential in this business. And 6 months in, that view is strengthened. I still see this potential, and I think we are on a very good path. I think the business has come a long way in creating the position that we have today, but at the same time, we are just starting, and we are working together in new ways across the group that I believe will be very fruitful in the future. We're strengthening the group governance, and we are going to work even more across business units on new opportunities. So I really think we are in a good position to continue on our journey. And also I learned a lot during the first 6 months. And I still don't believe I know everything about the business, but it's been a great learning journey so far. And I really look forward to the next couple of years here to bring this business to the next level. Dividends, will they return? Well, I believe this is a question for the board, really. And as of now, we have nothing to communicate in terms of them returning. And we believe there are still opportunities for us to use our cash that we generate in positive ways. What is the Supergift sales growth for the quarter? I don't have that I don't have an exact figure. I can of course bring it out, but we have a decrease in Supergift sales due to the government support last year for company gifts to employees that were up to 2,000 SEK per employee last year, and this year it's down to 500. So we see a strong development on Supergift in terms of number of cards sold through our main channels, but the values are lower and the total value of cards put out is lower than last year. I believe we have actually in the report we state the percentage for the quarter. Is Niklas 100% busy with his new tasks? Do you think we will have a good return on his function? Yeah, I mean, Niklas is busy, of course. He is busy on M&A work, and he has been instrumental in onboarding me into my role. And he's a valued, of course, member of the board as well, and has a lot of knowledge about the business that we use as much as possible, of course, to really have a good return on investment on Niklas as well. Any changes that you know and can comment on in terms of shareholding? So there was a post sold from Skandia, I believe, due to new directives that for their portfolio. And most of that, if not everything, was picked up by two main shareholders that were existing shareholders. And I believe that will be communicated within short. And then you will be able to see that in the shareholding, of course. Should we expect lower gross margin revenue in future contracts, or this quarter has been just volatility? So we should expect to see not so many new contracts with lower gross margins. It's not our aim to sign on new contracts and new programs with lower gross margins. However, with some of the ones that we have signed already and with the businesses that we have onboarded, this will continue to dilute gross margins slightly. Then we also have the volatility of the business. So the dilution of gross margin is here, and it will be there for some quarters. But we have seen an effect in this quarter that was also due to volatility between quarters. But I do believe that, of course, onboarding new businesses over time that do have a bit of lower margin, such as Premier Direct, that we know have a lower margin that we had historically, will take down gross margins slightly. I do believe that the gross margin for this quarter was a bit on the low side, for sure. You added some personnel Q-on-Q. Was this mostly a seasonal pattern, or why? Can you comment a bit about OpEx moving forward? You added some. Not sure about what you mean there. If you mean that there's a personal view on the quarter-on-quarter development. But there, as I said, I believe, you know, the gross margin will even out. It will be a bit volatile over time as we have added new business units. It will also be a bit lower than what we have seen on the highest quarters historically. But I do believe we will come out of the year in Q4 with a bit of stronger EBITDA margins as well. And on the OpEx side, we are, working on making sure we don't have unnecessary external costs. We are coming down on the personnel side, and I believe we will be able to keep that kind of level as we continue to grow, and not grow the OpEx in line with revenue and other growth, of course. Yes, any thought on changing which profit that you focus on? Is it still EBITDA? It's still EBITDA. I do believe that it's also important to follow, of course, the EBIT in some way, to see that, you know, what do we come out with But EBITDA will continue to be our main focus moving forward, for sure. Are there plans to move the Awardit stock to small cap list in 2023? There is no current plans to to move to a different list. I mean, as the business will progress, we will evaluate, I mean, which list is best suitable to take us to our next level, basically. But there is no current plans on that. Yes. Anything else? Okay, so again, I'm very sorry about the technical problems that we had. I'm glad that so many could rejoin us and take part of the call. And any questions, please reach out to me, of course. Also happy to set up one-on-one calls or meetings. So you have my contact details in the presentation and in the quarterly report that is shared online as well. So thank you very much for joining, and see you soon again. Thank you. Bye-bye.